My name is Damian Wandera. I'm an investment associate at HAAWK Capital, and I'm going to take you through ways to make passive income, to make money while you sleep. So an investor may ask, why should I take my money out of a bank deposit, which also gives me interest, and invest in a fixed income fund? And this will be the answer. The fixed income fund gives you a higher interest rate than a bank would offer you. This is because the fund not only invests in bank deposits, but it also invests in government bonds and corporate bonds, which tend to have a higher return than bank deposits. Another key advantage of a fixed income fund over bank deposits will be the flexibility. With a fixed deposit at a bank, you have to wait until the fixed deposit matures. So if you fix the money for 3 months, you have to wait until the 3 months elapse, and that's when you can get your money back with the interest. Alternatively, you could break your deposit before the end of the period. However, you'll be penalized by the bank and you'll have to lose some money. With a fixed income fund, you have the benefit of accessing your money when you require or in case of an emergency, and you do not have to be penalized when you access your funds, so you do not lose the interest that has been accruing on your money. And the other advantage of a fixed income fund over a fixed deposit at a bank is diversification. With a fixed income fund, the money is placed in many banks, in many interest generating assets, and not with one bank. And what that does is it reduces the risk that you face as an investor, because we have seen banks that have gone into receivership before, banks that have collapsed before, and again we go back to not having your eggs in one basket. So with a fixed deposit in a bank, you are actually exposed to the risk of that bank, and with a fixed income fund, you have actually diversified away that risk, such that only a small portion of your money perhaps would have been placed by the fund manager in that bank, and that gives you a key advantage in case there's an adverse event in the market which affects your bank.